SAP raised its outlook for the year, citing an accelerating cloud business in the second quarter. That's as the German software giant benefited from increased spending on its business products. Joining us now from Walldorf, Germany, is Luka Mucic, CFO of SAP. Luka, thanks for your time. Let me first ask, the obvious question is, what does the trade war, what does this current sort of geopolitical drama mean for a software maker as opposed to a maker of goods?
Yeah, thank you for the question, and thanks for having us on the show. As you can probably read from our numbers, we had an extremely positive performance in Q2, as we had all through the first half year 2018. I think in a period of time in which there is growing uncertainty, companies across all industries are turning to software providers like SAP to really help them weather these storms, become more efficient, be able to have great transparency around their supply chains. And you see that from our results with our strong growth in our cloud business, up 40%, as well as the strong, resilient core license business that we have, which was up 3% as well. So from that perspective, we believe that we will do well also for the remainder of the year, despite any uncertainties that the macro environment might bring to us.
Luka, good morning. It's Guy. Is the rate of change in the pickup for the cloud business changing, i.e. is the delta kind of moving up? Is this business accelerating? Give us a sense of kind of what is going on there.
Yeah, it's definitely accelerating, Guy. Great question. 40% cloud subscription growth at constant currencies was actually the biggest growth rate that we have enjoyed in quite a few years. And even if you discount the latest acquisition that we have been doing, which has been closing in beginning of Q2 of Calidus Cloud, which makes us now a very strong player in the fast-growing CRM market as well, we would have been growing in the mid-30s. So that organic growth machine is definitely accelerating, and we see great prospects also for the remainder of the year. That's why we have raised our cloud guidance by 100 million at the low end and another 50 million at the high end after having raised it already in Q1. So definitely momentum is accelerating.
The cloud business obviously is all the rage, Luka. I like the CRM business, and you've recently launched a new suite, right, C4. What kind of growth can you expect in that part of the software universe? And are you going to make any acquisitions, for example, to grow the business? Is it all going to be organic growth? How do you see that going?
Yeah, very good questions. First of all, on the acquisition front, we have made our major moves to round up our C4HANA value proposition. With the acquisition of Calidus, we can now really offer our customers an end-to-end portfolio in the CRM sales space with sales performance management, configure price quote solutions, which are perfectly complementing our organically developed CRM Salesforce automation solution. Next to that, we have done some smaller acquisitions to come up with a really compelling customer profile management solution. That was Gigia that we did towards the end of last year, which is really a differentiator because we can now offer customers to really manage the profiles of their consumers in a data privacy compliant way across all of the channels of interaction. And we have made another small acquisition in the service management space, which establishes us as a credible player here in the cloud as well. So from that perspective, we have now the main assets that we need, and we see absolutely an exponential growth opportunity in CRM. This is the biggest software applications market. SAP so far has been underrepresented in it. We are breaking this out now as a separate reporting segment, so the market and you will be able to track our progress on a quarterly basis, and the growth rates there are spectacular. You can see that in the first half year, this business has been growing in the triple digits, and the commitment stands that you will continue to see this triple-digit growth for as long as we can look out into the future.
Luka, you mentioned data privacy. I wonder, A, how much has GDPR compliance cost you at SAP? And B, is it really a tailwind for your business? I mean, do you have more interaction, more billable sales with clients because of GDPR?
Well, you make an interesting point here. I believe SAP, due to its strong heritage coming from the German market, which has always been one of the markets that has been highest in terms of GDPR requirements, has a natural advantage in terms of the trust that our customers are awarding to SAP, that we know from decades of operating GDPR compliant practices that we will be able also to meet the heightened requirements. And in fact, we have been the first company in our industry which has been certified by the British Standards Institute for full GDPR compliance. So from that perspective, it is a tailwind for us coming from the trust. In terms of cost, as we had very, very solid practices even before the GDPR was enacted by the EU, actually it was for us more or less an operational adaptation of a few bells and whistles, so did not really result in material cost for SAP. But we see that the market is turning to capabilities in order to properly manage GDPR, and they can definitely get that from SAP natively built into our standard solutions, which is becoming very attractive.
Luka, just a kind of quick one on how you think the market perceives your business right now. There are 28 buy ratings on your stock. The stock off its low earlier on this year is up 27%. You're telling me that the business is accelerating, that the cloud business is accelerating. How much more gas have you got in the tank right now in terms of driving this business forward? The market already, in some ways, likes what it's hearing. There's a lot of buy ratings out there at the moment. How easy do you think it's going to be to satisfy expectations?
Look, I think we have built this company in a sustainable sense for the long run. Our portfolio is extremely modern. Our majority of our revenues is basically posted by solutions that are in the market for 7 years or less. Think about our in-memory database technology, HANA. Think about S/4HANA, our digital enterprise resource planning core solution. Think about C/4HANA now, and many other solutions that are in high demand as well, like digital supply chain management solutions, risk management solutions. So from that perspective, I think we have a great amount of gas in the tank to further accelerate. And actually, one of the reasons why we have even raised our 2020 ambition in the cloud to up to 8.7 billion euros in revenues is, of course, that momentum that we have from this great and broad portfolio. And we definitely believe that we will not stop in terms of growing in 2020, but actually will quite consistently continue that march as we move past 2020.